Start whilst we get people in from their desserts. We had an action-packed morning. It carries on this afternoon. We've had some great sessions and we have many more to come. The next one indeed is the panel discussion, the role of regulators in the adoption of RegTech, an important area where lots of regulators around the world are doing quite a lot, and without them, RegTech isn't going to happen. So I'm delighted to welcome as chair of this panel, Dr. Giovanni Bandi, who is Executive Director of the Regulatory Genome Project at the University of Cambridge. He's an expert in financial regulation, regulation technologies, and risk management analytics, currently involved in numerous projects to introduce AI processes, so very topical, machine-readable regulations and RegTech applications to the global regulators community. Previous work for the Qatar Regulatory Authority, I understand, and has an awful lot of relevant experience, so he's the perfect person to chair this panel. So I'm delighted to hand over to you, Giovanni, if you'd like to introduce your panel. Thank you.
Thank you very much. Well, I would like to invite the panelists to actually come to the stage. We have Sholthana Begum from the FCA, Olivier Fins from the CFA Institute, and Imran Akhtar, which is with Nomura, and also Louis Weber, who is with the Bank of England. And I will probably start, well, ladies first, but actually no, because you're just on my left. Sholthana, would you like to introduce yourself?
Oh, introduce myself, okay. Hopefully my mic is working. I'm going to assume it's working, and then you can all hear me bellowing at the back of the room. So, as Giovanni mentioned, my name is Sholthana Begum. I've spent 2 decades in the central banking and regulatory industry, both working 17 years at the Bank of England, doing things in terms of data and technology, building stress testing programs, predictive data sets, and long before that, I'm actually an accountant by trade, so I spent a lot of time in risk, and I say that to you because I think my data journey has not been a linear one. I joined the FCA almost a year ago now, and I'm leading the data and strategy services for the FCA, who has ambition to be the first-in-class regulator, not just in the UK, but also globally in the world of data and technology. So I really look forward to sharing some of that insight with you all.
Thank you very much.
Hello, everyone. My name is Olivier Fines. Indeed, I am with CFA Institute. I am head of advocacy and policy research covering Europe, Middle East, and Africa. And we have elevated digital transformation as one of our key thematic priorities, including how it's going to change the dynamic relationship between the providers of capital, those in need of capital, and the regulators in between. How is data going to transform the dynamics at play here, which will have an impact on what we refer to as fiduciary duty, ethics, professionalism, and also the quality of service that is provided to those clients. So delighted to be here today. Thank you very much.
Good afternoon, everyone. My name is Imran Akhtar. I work at Nomura. I'm Global Head of RegTech. I've got about 20 years of industry experience across multiple sectors. Currently, obviously, I'm working in the financial services. I've had over 10 years experience in equity technology. And then over the last 7 years, been working in regulatory technology, putting live such initiatives such as MiFID II, SFTR, the CFTC, SEC rewrites.
Great. Hi all. My name is Louis Weber. I'm head of what's called RegTech Data and Innovation in the POA at the Bank of England. So I've been doing that for about 18 months. And before that, I was head of division for a similar division in the insurance supervision area at the bank. I mean, broadly, what I do is we'll get into this in some of the discussion, I think, but the POA decided to kind of set out for itself a data strategy that also obviously touches industry in the form of reg reporting and so on. And I lead all the downstream use within the POA of the data that we collect.
Well, thank you very much, all of you. Well, as you know, before we start, actually, we'd like to remind everybody that if you have questions, you can submit actually through the Brella app. And we will answer those during the question and answer question. We have few interesting topics that we discussed. We tried to work out through you will excuse me, as an academic, I feel like I have the right to ask also the tough questions on behalf of the audience. And all right, so the role of regulators in the adoption of RegTech. Well, I've been here the whole morning, and frankly, there's one thing that everybody should start asking themselves is, the regulator may ask or implement specific policies, but also there's a relationship with the regulators, which is to give and take. And that is actually at the base of regulating a market. There are two aspects to it. One is that the rules, how they are given, should that be considered as part of the technology services that the regulator is going to implement. And of course, the data part, which is the one that I see a lot of you are very concerned with. But there's also two aspects to it. There's also the giving something. So I'll start with the most logic question, which is how should regulators support innovation in regulatory compliance and the adoption of RegTech? And so I think a question like that, maybe Luis, you're the right person to start with.
Yeah, thank you. So, I mean, it won't surprise you that I'd probably start by saying all questions, not just this one, we kind of look at through the lens of our statutory objectives, the primary one, which is about kind of safety and soundness of the insurers and banks that we regulate. On this question specifically, on compliance and supporting RegTech, I suppose the easiest answer is in terms of some of the big initiatives that we've got in play, not least around regulatory reporting, which obviously has a huge compliance element to it. On the reg reporting front, we a few years ago we embarked on a change program of reg reporting for both insurers and banks. It was a couple of years ago on the insurance side, more recently for banks. And the kind of the snappy punchline of what we're trying to do is essentially more with less. So post Brexit, we are now in control of all the reporting definitions and so on. So there's an opportunity for us to kind of realign reg returns with supervisory need and the kind of data items that are actually used for supervision in practice. And then all the kind of the things that flow from that are sort of lower burden for firms in terms of volume, but also crucially integration end to end of the data lifecycle from definitions, collection mechanisms, ingestion, and then all the downstream stuff that we have in the PRA, storage and then onto use. There's many elements of compliance wrapped up in that, but a crucial one will be about, as we go through this process of redesigning the reg returns, we'll need a UK data point model, for instance, that is, gives us the right level of granularity and relationships between variables and so on, that we can use that to decide what we put into the new reg returns, and then kind of design the technical implementation route accordingly. So there's a huge role for compliance and innovation in RegTech around all of that, I think, because this is intended to be and will be the sort of the big reform of collections that meet our needs and industry. The only extra thing I wanted to say about it is we've opened up a few formal sort of routes of engagement with industry on this, one of which is called Transforming Data Collection, which is a joint bank FCA initiative. That's about, the strapline vision for it is ensuring that the two regulators get the data they need at the lowest possible cost to industry, and getting into all the technical implementation stuff that sits behind that. So that would, I think that's our role really, redesigning, in this case, the reg returns to support our objectives, and then kind of the downstream compliance questions flow from it.
Well, that's actually a very good point. And actually, I would point to Imran in this specific case. You represent a large institution. You find yourself in the position of sending the data, and from what Luis is telling us, there needs to be some sort of harmonization of the data. What's your comment on that?
I think, as Lewis mentioned, it's about doing more with less, but ultimately many of you, as many of us, are also on a transformation journey now for you to be able to be as agile as the data strategies of the regulators are demanding. You have to have a common stack, and you have to be able to program and test and release within short periods of time. So I think it's not just about the data in the right places, but data quality is important. There's no real need to report bad data because it doesn't help you, doesn't help the regulators, doesn't help the market. So I think Lewis is very much right in the sense that there are challenges to overcome, and I think we're all trying to move towards efficient, robust, solid, reliable, transformed data that all these companies you see outside are helping people with, because they have experience, they have SMEs from the industry from both sides, and so I feel it's important to make sure that you all realise you're not in this alone. There are experts, and we're here as a panel to talk about our experiences. We've done a lot of data-driven and technology transformation exercises in our years in industry. So just remember, reach out to someone. There is someone somewhere who will be more than happy to tell you how they've done it, so you can learn from their lessons, and hopefully together we can all send every data item that we need in the right way, in the most efficient way, and as quickly as possible. So that's how I think it should go, and we're all going in that direction.
And again, that is very interesting from a research standpoint point of view. We actually see that happening, that there's some sort of convergence that's becoming necessary. But also there's a lot of legacy, and new technologies can help with that. I actually would ask Sholthana, how do you see that? Would you see...
I think the question you posed at the start was a really interesting one. So let me see if the FCA can meet that challenge a little bit. And thank you, Imran, because I think you highlighted really well that the RegTech communities really play a pivotal opportunity for discussion and debate. So let me set the scene a little bit, why I say that, before I say how the FCA supports. So you would have seen in the news and all sorts of places that, through the last few months, we've seen several significant market events, FTX, Silicon Valley Bank, Credit Suisse, just to name a few others. But alongside that, we've also seen some significant moments in tech. ChatGPT, the clampdown on TikTok, the regulation of AI, the white paper. Some of you might be interested in the US view that you would have seen just yesterday. So what can we do about that as a regulator? Well, the FCA actually does a lot in that space. We hold a number of tech sprints. Indeed, today and tomorrow, if you're interested in the Financial Services Register as a regulated entity, you can join that tech sprint. And we have a number of tech sprints, ESG, greenwashing. Whenever the FCA is bringing out something new, it is not doing it in its own traditional methodologies. It is asking the industry, it is asking third parties to come and join the forums where you can actually innovate and use information available to you with the support of the regulator. And then that's a new and interesting and pragmatic way to approach technology, because it's moving really fast. The other things around that, we are part of a global network, GFIN. So we're not just trying to do this on our own as a regulator. We have a body of regulators all around the world actually working together. And there's actually a first global tech sprint being hosted by the FCA. So those are just a couple of ways where I think we've really changed the dial. Interestingly, I know a couple of colleagues sitting here both worked at the FCA. And just before this panel, they said the FCA is really doing things differently. And so it is an interesting place to be. We have a digital sandbox, and that sandbox is allowing pre-authorized companies and third parties to start look at how they can join that regulatory perimeter. So absolutely, I do think there is a role for regulators to play, and I think we are taking it seriously.
Well, that's excellent news, I think, for everybody. So I'm going to pose a question, but regarding specifically the challenges that there may be, though. So are there any challenges that financial institutions are facing in expanding their RegTech capabilities that regulators can help with? And I think, Imran, you're in the right spot for that.
So I think there has been challenges, and I think everyone would like their challenges to be solved tomorrow. It's not going to happen, but I think we have seen progress. We've had regulators working together, harmonizing the sets of fields that companies are supposed to be reporting. You might laugh when I say back in the day you were supposed to send files depending on your entities, depending on your asset classes, depending on your life cycle events, they all had different CSV templates. It just doesn't make sense. So to have a harmonized format where all regulators are now agreeing these are the full superset of things for us to send, that just makes everybody's lives easier. You know, it's not just about filtration, but it's also about, you know, the complexity of extracting and obtaining this data. So I think as time has gone on, I've been working in this area for 7 years, it has definitely improved. You know, MiFID came along, lots more standardization. The rewrites are coming. You know, we just had CFTC, we've got ESMA and FCA coming, and of course Japan as well, followed then by, you know, various others, MAS and Singapore. So it's very important to remember it's not going to happen overnight. Is it changing? Yes. Is it becoming easier? Yes. Have technology advances made it more plausible? Yes. And I think, you know, there's still some way to go, but, you know, it's just a matter of time. I think it won't be very long before we'll all hopefully be in the same place, doing the same, you know, data sets, reporting asset classes, et cetera, et cetera. So I'm very hopeful for the future. It's definitely moving in my direction.
Realize that Imran is in the position of being circled by regulators on both hands and the trade body and an academic. So I actually would invite the audience to send specific questions on this one. What can, I'll repeat that, if there are any challenges that financial institutions are facing in expanding their RegTech capabilities and what can a regulator help with. Another topic, strictly speaking, related to what we're discussing, but perhaps expanding not just to RegTech, but FinTech in general, I would say. So to what extent can regulators develop agile regulatory interventions while driving innovations? Traditionally, interventions, they're not looking into being agile nor driving the innovation itself.
I think there's a question over there.
And
there's a question over there.
yeah, we're going to do that. The questions at the end. Thank you. And on that matter, actually, I would ask Olivier, what do you think of that?
Well, there's quite a lot to say about this, right? But digital transformation is, at CFA Institute, one of the 4 major strategic scenarios that we are researching as part of what we call the future of finance. And in a nutshell, our purpose here is to explain that AI and advanced quantitative analytics will augment human judgment as opposed to replace it. I think this is very important. We do believe in the juxtaposition of both as opposed to one replacing the other. So there's 2 perspectives that we can take on the question, right? One, on the one hand, that of the regulator, and regulators will use data to inform supervision and enforcement. On the other hand, you've got firms that are going to use data to integrate and secure the regulatory compliance of their decisions on an ex-ante basis, right? So I'm focusing on the regulator segment here. Why are we even talking about this? Well, largely because of the exponential rise in the accumulated data over probably the last 15 years on the impulse of general IT progress, big data, regulations, which we're going to discuss in a second, and most recently, let's face it, digital finance, blockchain, and ESG, those 2 will create a tsunami of new information for analysts to play with. So just on regulation, and just for a bit of fun here, I'm going to make a bit fun of regulators, don't worry. We've all witnessed the staggering increase in rules and requirements that took place since the 2008 crisis, right? So there's a few figures that we had been observing as part of recent work. Just MiFID II alone, for fans of MiFID, that was assessed at over 7,000 pages long regulation, including technical standards. Dodd-Frank in the US, enacted in 2010, was originally a 1,000-page long law that turned into over 22,000 pages of regulation. The same RegTech Council in 2018 had calculated that from 2009 to 2012, over 50,000 regulations had been published by the jurisdictions across the G20. So to cope with this broadening regulatory footprint and framework, firms and regulators have no choice but to optimize processes through advanced data analytics. The same RegTech Council calls that semantically enabled regulatory technology, right? So that we even have to use new words when we talk about size of data. I've learned what a quintillion is, or what a zettabyte is. If anyone knows what a zettabyte, it's anywhere in the order of 1 trillion billion bytes of information that gets created every year in the world in 2022. That's about 15 times more than in 2012 and 3 times more than in 2019, right? And just for context, a byte is more or less the size of a small word, right? So when you look at that data, 90% of it, as we've seen recently, has been created over the last 2 years. It is a data revolution, and 90% of that data is unstructured. It's video, it's voice, it's qualitative information that regulators obtain from speaking with firms, and only a fraction of that unstructured data is analyzed today, right? This is where AI and machine learning come into play with natural language processing. So for regulators, the conundrum is actually to optimize their resources by focusing on the pockets of risk where imbalance is likely to materialize in actual harm or systemic impact. You cannot expect regulators to keep ramping up resources ad infinitum. At some point, you need to optimize and say, we need to have a better understanding of where the risk is likely to materialize and focus supervision and enforcement on those very pockets of risk. So, and I think this is what will be discussed at question 4. What is the data strategy of the FCA planning to do about this, right? So the regulators do recognize the need to use better data to identify risk and intervene efficiently, which I would sum up as what has been seen in some corners as the 4 V's of big data: volume, variety, veracity, and velocity. We all know the problem with data is one of quality and usability, right, which McKinsey summarized in their Finance 2030 plan, referring to what they call a master data management strategy for collection, which we've discussed, storage, and interrogation of data, which needs to be cleansed. Anyone who's worked with AIFMD or Form PF data in the US knows that data is most of the time garbage in, garbage out, right? So to analyze that data, first you need people who understand what it means to critique this data, to cleanse it at the point of entry, and then use machine learning and advanced techniques to cross-reference it, structure it, and allow it to be consumed and interrogated properly. But this cannot be done just by a machine, taking us back to this concept that we call AI plus human intelligence, as opposed to just AI. You will need people to have a critical judgment of the meaningfulness of this data. And I'll just end with a military strategy analogy that I like, which was used by, for anyone who's a history geek, Maréchal Foch, who was a French general and supreme Allied commander during the First World War. And he himself had analyzed how the Romans themselves at the time had used their military forces. And essentially it came down to 3 points: concentration of efforts, reasonable and conservative use of resources, and freedom of action. I think this summarizes very well how we should probably think about optimizing how we look at data. Thank you.
Thanks for that. I think it's actually a very comprehensive piece of research that the CFA has recently embarked on. And I would continue with that, actually. Louis, you mentioned at the beginning the PRA has a strategy for data. And answering to Olivier's point, which is you really can't process everything. So you need to have some sort of strategic or tactical, if you will, move that as a regulator you need to work on. You can keep expanding teams with the data scientists. What is your comment on that?
I agree. I can just say a couple of words about our data strategy if it helps. The PRA published a strategic review into itself in summer 2021, which was sort of 8 years into the PRA's being inside the Bank of England. What's going well, what could be better, any gaps, things of that type. And one piece of that was, how we use data in the organisation and face industry. And laced through it are exactly those points that Giovanni made about efficient use, ultimately, efficient and effective use. One of the things we are doing, I mean, on that unstructured data point that Olivier, you mentioned, we, like lots of people, have been investigating natural language programming to kind of help us understand the swathes of unstructured information we get from firms in the form of management information. We've made good progress. The idea is that by having tools such as that, they're a crutch for supervisors. So exactly to your point, it's not replacing supervision, but it's a crutch to make supervision more effective. So you're more easily able to find, the particular piece of information you want, and also recognizing that lots of structured quantitative information resides for us in unstructured sources, so in those management information packs. So that's the idea of that tool, and we've got other things besides, as I say, about being that crutch for supervision, exactly to the point that you made.
Very interesting. Sholthana, would you like to comment, or should I pose a more direct question?
Hit me with the direct one. Come on.
So
It was always going to come.
yeah. What have been the most successful initiatives undertaken by regulators, and what are the plans for the future? Which were your successes, basically?
Oh, then you've given me a nice question, because there's lots we can talk about here. I think it's a great question, right? We've talked about things from machine-readable formats to make the rules easier. Yes, you're poking fun at the regulator, but I think it's a fair challenge. I think in my time at the bank, I used to say that the rule book was more complex to read than the War and Peace. And it's certainly 70 foot high at the FCA. It's a complex regulatory framework, and we have, circa 54,000 firms to regulate at the FCA, from large global financial institutions to smaller players within our local communities. And we have to ensure that we're creating parity within those communities. So let me take you through. In fact, I'm going to use my notes because there's quite a lot of things I could talk about here. Ultimately, consumer protection. So, for example, things we've done is we've introduced new analytical tools to help spot and intervene in harm for consumers faster. How do we do that? Well, actually, we've been able to use new sources of data, not supplied by firms, to actually identify high-risk financial adverts. And that has allowed us to actually remove, I think in 2021, we removed 564 promotions off the websites, off the actual financial institution firms to support vulnerable customers. So part of it is prevention. So actually the FCA is starting to think about it even before we get to the regulatory reporting requirements. What can we do to prevent harm? Harm is not happening in that moment in one go. There are paths to harm. And where can we as the FCA actually lean into those paths of harm and remove them? Let me give you another example, web scraping. We've used web scraping to identify potential scams, and we're scanning an average of over 100,000 websites every single day to identify newly registered domains that show characteristics that could be scams or fraud. And we're actually removing them off the domains before they even ever hit a website. So there are lots of things we're doing in that preventative way, which actually meets the needs, I think, of your challenge, which is, are regulators taking initiatives in between our regulatory reporting requirements? Yes, we are. I'm very lucky that the FCA is one of the first regulators in the world to be fully cloud hosted, and that means we can take advantage of newer technologies and agile ways of working. That then allows us to make sure that we're using the data that's supplied to us in the most effective way, quickly. Things I can include there that I'm aware of and I've actually implemented myself is we have an enterprise-wide data catalog. Every supervisor can access every data set. Alongside that, we host knowledge articles so that our own supervisors, they go through the organization, don't lose the cadence of that data. We're constantly trying to increase the knowledge pools around data that we have so that we make the most of it. I'm also responsible for our data lake. We have an enterprise data lake. And again, structuring that and ensuring that we're putting all our sources of data in there. I think it's very fair, what Olivier said. We are a massive data organization, and it's fair to say that word zettabyte isn't new to me. We buy data sources, we collect data sources, we harvest data sources, and I've got over 165 other institutions that I share data with too. So we really are a big data warehouse, and it's really important that we continue to invest. So let me give you a couple of ways in which you can join us in that. Transforming data collections, which Lewis mentioned, a joint initiative. I'm actually the sponsor for that initiative. And we delivered our first intuitive form. What does that actually mean? Well, I'm sure some of you who are responsible for regulatory reporting requirements and actually giving us data think, why on earth have they done it like that? Well, I'm sure at some point in some time there was a reason something was done like that. But we're actually going out to the industry now through our user-centered design and ensuring that any new form that we're making, any new form that we're collecting, actually the firms we regulate have a voice. And they can say how hard it is to fill in that form, whether it's a small credit union or a large global bank. We're giving firms the opportunity to really join us in the journey to lower that cost of burden of compliance, allowing people to play in the environment whilst doing that safely. Lastly, let me showcase something that's coming down the line. I'm really, really proud to announce that we will be doing a permanent digital sandbox service here at the FCA. So we'll be providing new data sources, existing data sources, and also synthetic data sources that we're building out that firms, non-regulated entities, and third parties can use to try and build better regulatory systems for our industry. So I'm really proud that we continue to support the regulatory environment in different ways, bearing in mind that we want everyone to innovate securely and safely.
Well, thanks for that. Actually, the last remark is excellent and should be really much of interest for anybody who is in the room or right outside the room. Because what Sholthana is basically saying is that here is the data for you to actually produce something that can help and support the regulator in the process of supervision, which is fantastic. So we have few questions. We are actually on time. That's fantastic. That's very good. Sholthana, I have a direct question for you, and I think it's an important one because it touches on a very important point. So regarding the collaboration across global regulators, do you have a view why implementation timing forces EMEA cannot align?
Oh, you hit me with a very specific question on EMEA, and I think my colleagues that work on EMEA would slap me on the wrist if I said something that I shouldn't.
Well, let's make it generic.
Let me make a general comment around this. So GFIN, which is the Global Financial Innovation Network, is actually chaired by the FCA this year. And I mentioned to you around a global tech sprint. That tech sprint is around greenwashing and ESG. Sustainability within our kind of organizations and respective organizations is really important. So that is an example of where we're taking a particular regulation where unstructured data will be king, where we have an immaturity with data, where organizations and jurisdictions will be actually on a learning journey together and actually doing that together with regulated entities. So there is a start in this journey for global. Technology and data is borderless, and I think everyone in the room would agree with me when it comes to that. Jurisdictions are becoming more and more frictionless as we go forward. So I think it can only increase from here, is what I will say.
That's very interesting, and I have a question for you, Luis, as well. Par condicio here, regarding the Bank of England and the fact that it's changing reg returns. How is this being looked at in the context of other global regulators, or are returns going to be less harmonized, which links very much to what Sholthana just said?
I mean, truthfully, we're doing the work now. The reason we're doing the work now is because, it's one of the things that is now in our gift post-Brexit, that we can, decide on the content of reg returns aligned to the specific needs of UK supervision. So, that's kind of our starting point, as opposed to starting from, the other end of harmonisation and working out. But it's a really important point, picking up on what Sholthana was saying, we supervise a large number of global firms with UK entities that have kind of different legal forms that will have, different forms of reg reporting across, the jurisdictions they operate in. So we're mindful of it, but the starting point, as you would expect, is kind of our objectives and what we need to serve those, but then achieved in the kind of simplest, most frictionless, lowest burden way we can with industry. And TDC is, just to give it another plug, is one of the good routes to formal engagement on this. There's information about it both on the FCA's website and ours, if anyone's interested.
Thanks for that. Actually, I would ask Imran to comment as well. You are in a global firm. Both questions were about harmonization across border, which is, by the way, my sector of research. So I would like to hear your comment on that. what are the challenges?
I think most importantly, these are just data points. For me, it's, the entity has a country code and that brings it into alignment, or, you've got European traders who are sitting in a location and they're trading in other entities. So for me, these are just data points. And the fact that they are coming, like Sholthana said, I'm paraphrasing in my own proverb here, but you're either part of the solution or you're part of the problem. So, if you all feel that this is very challenging, very difficult, well, just imagine if you didn't have a strategy in place, if you weren't given directions and arrows pointing in where you should go, just imagine how much more difficult your journey would be, not just for one entity, but for all of your entities, wherever they might operate. So I think it's important to understand, we're not there to beat the system. There is no system to beat. We're all here trying to achieve the same goal: clear, transparent, open markets for the consumers. And, we are our own consumers, if you think about it. Your pension plans and the markets are all being utilized by each and every one of us. So I think it's important to remember data quality, clarity, transformation. I'd never heard of that volume of data. So there's more.
So representation, inclusivity.
Yeah. So I think it's very important to remember that these data elements are important. And, if you ever feel the burden of generating these, just remember that, as Sholthana said, it's there for a reason. And, you might not understand it, but that doesn't mean that you won't be able to help somebody, even your potential future selves, your children, their children. So, we're building foundations here. And I think it's important to remember that what we do is not just for today. It's for the next 5, 10, 15, 50 years. Who knows?
Can I just make one extra point on this? So, talking about reporting, it can often be quite dry, I guess, but it's super important. Sholthana mentioned some of the events that we've lived through over the past 18 months of, Russia, Ukraine, LDI funds, Credit Suisse, SVB. There's probably others I'm now forgetting, but having the right information, if you do, a supervisory kind of job at your fingertips at the point you need it most, is everything, really. Which is why the design of, the data space is so important, and also, the points that came up earlier about quality and speed of production and so on, which is why we're putting so much emphasis on it.
Thanks. I do have questions, but I'm conscious of the fact somebody had a question on my right-hand side earlier. I'm not sure if we can reach the gentleman. Thank you.
Sorry, I just wanted to ask. Obviously, there's lots of good things that we can do with AI, particularly in the reg change space, identification of requirements, obligations, control mapping, etc., etc. But it all starts with that data input in the first place. And now there's a huge cottage industry around digitizing regulations, when arguably the regulations should be digitized at source and provided in an easily extractable format. After all, it allows us to comply. Is that something the regulators are planning?
It's something that's in scope for the TDC work I was mentioning, exactly that. So the methods by which we get regulatory data into the two organisations. So covering, the things you mentioned, your reporting instructions as code, etc. Absolutely.
Sholthana, please.
Yeah, I'll just add to that. It's actually a new use case I was discussing last week, so it's a really topical question. There's parts to that life cycle. We're a principle-based regulator, I think it's fair to say. And if I put principles against machine, we have some work to do to meet that distinction. That doesn't negate the fact that some things are very linear, and where they are linear, we should be doing things at source, absolutely. So one of the use cases in TDC is our incident outsourcing third-party policy. That's actually being built with data at the heart of it, logical data modeling, built into policy design, and therefore interoperability and interpretability should be far easier for firms as they go through. And it's really about how much do we look back versus how much do we fix forward. It's fair to say that the regulator is also on its own digital journey, and therefore it will continue to develop and improve along the way. And one of the ways you mentioned is exactly the right sort of scope to go for.
Thanks. I have another question still on the data, since it is key to this discussion. Data governance and data quality. has been a key topic in our discussion. Is there a need for regulatory guidance in data standardization with RegTech companies, specifically people in the room, should have it as a minimum requirement to ease adoption of technology by supervised firms, effectively? Sholthana.
I can have a go, but I'll probably pass it back to my previous life in the PRA and then pass it to Lewis on the BCBS 239 for those people who are interested in data principles. I'll answer it as an organisation. If we take away the fact that we are a regulator, we are an organisation that has lots and lots and lots and lots and lots of data. And therefore, managing our data and ensuring that it is governed and the quality is good and that actually we create the frameworks is just as important as any organisation in the financial services industry. It is actually under my own area that we're thinking about new parts of that data lifecycle. So we're actually going to be building things like a data ethics policy and going beyond the traditional management of just storage, ingestion, collection and disposal. It's now about utilisation, exploitation, and making sure we have foundations that allow us to do that full exploitation is really important. If we're going to use AI in our critical outputs, do we have the right model risk governance? Do we have a dynamic type of governance that changes just like our models do? I'm a massive proponent of using data and technology, but it's definitely predicated on how well we build our foundations.
Thanks, Sholthana. I think we're up, and I would like to close with a very simple remark. Research at the University in Cambridge is indicating that both the FCA and the Bank of England, but particularly the FCA, is leading on standardization. So most of your questions have been toward that part. And I think that entities which are supervised by the FCA are in a particularly good position, because that seems to be the root of a lot of the standards which are about to come. So with that, I would like to close the panel. Thanks all of you for finding the time to be with us today. And thank you very much.
Thank you.
Thank you.